Welcome back to the Crypto Factor. My name is Paul, and today we have Gareth Soloway for the Bitcoin Deep Dive. We're going to be talking about Bitcoin, gold, stocks, cryptocurrencies, you name it. Gareth, thank you so much for being here. Really appreciate it.
No problem. It's always a pleasure, Paul, to join you and chat about Bitcoin and the rest of the markets.
So, and I have two extremely important questions for you right now before we get started. Everybody wants to know this. Number one, where are all the computer screens?
I'm in a different location. I'm in a different location all the way across the United States, 3,000 miles away. So we're just making do, and it's a little bit of a different vibe today.
You don't carry them with you?
No, not that many.
Okay.
It's a good, if they ever make them where they can fold up in a little nice box, I would.
That would be cool. Like those little foldable, like rolls or something, right? Okay. And number two, the second most important question. This is a serious one. How are you, man?
I'm doing well, thank you. Keeping real busy with these markets. I tell you, between the stock market, commodities, and crypto, it is a wild market out there.
Yes, it is. So, Gareth, a while ago, long term, I was calling for 24K. You were calling for 12K. I thought we might wick down and go back up, but it's just looking like it's going to go down. It just keeps on hitting that 20K. It reminds me of that old 6K. Tell us what you think about Bitcoin. Obviously, we're talking about Bitcoin. Gareth, man, what is going on?
Yeah, so let's take a look at and go right into the charts, right? So basically we have the chart, which you're right. You know, we pierced the 20,019.5 high from 2017. We got a nice reversal candle. So again, what you can see here is when you got below, you had this beautiful reversal candle. That was short-term bullish. Now, what we've done since then is almost nothing, right? 2, 4, 6, 8, 9 days where we've basically been going sideways. And for me, I look at that and I say, okay, we're still holding this 19.5, 20,000 level from 2017. That's a positive. That goes into the positive column. What I don't like is how long it's taking to start to push up. So I'm still have a slight positive bias for a near-term bounce here. But to be honest, it's getting long in the tooth. And what the common saying, at least in stock markets, and it really applies to any asset, is that you don't get a long time to buy lows, just like you don't get a ton of time to buy the high or to short the highs. And so it's getting a little to the point where, like, you know, everyone that wanted to get in here is probably in. Now, why hasn't it started to bounce up? So I'm still optimistic that we could bounce back to about 25,000. I have this trend line here, which is that low from the Terra Luna collapse. But I'll tell you, if we start really going below this 19.5 again, you got to think that $12,000, $13,000 target is back in play down here, which to me, that is a major level.
Yeah, see, I didn't believe we're going to get down there. I got to admit, I didn't see 12K. Yes, I understand. If we break 17K, we could get down there, but I just didn't see it. It took me by surprise, and I don't know.
I mean, it may not get down there still, right? I mean, none of us know the lows, and the crazy thing about it is it may not go there, but it also could go a lot further below that, and we don't know that either. So we just have to, I think, in bear markets, and especially remember that this is a bear market that's unparalleled in past bear markets in crypto, because we've never had inflation where it was in Bitcoin's history, and we've never had a Federal Reserve that's aggressively raising rates and sucking money out of the system. So this is kind of uncharted territory. The only thing I can liken it to is the dot-com bubble bursting back in 99, 2000. And if that's the case, and remember, the Amazon chart from that time period, from 2000, almost is perfectly mirrored in the Bitcoin chart as well. You know, that makes me wonder if maybe there's even more downside. Hopefully not, because I'm looking to accumulate a bigger core position, but I got to be ready for anything. We all have to be ready for everything. I would just say, do not commit 100% of your assets. Do it in small positions so you dollar cost average in.
Do you think that this, if it is a bear market, do you think we can start getting out of the bear market, or at least see its lows by the end of summer?
Yeah, that might be a little early. I'm kind of in the camp where past cycles in Bitcoin, it usually takes about a year. So that would put us October, November. So it's just past the summer. But I do think that this downside will be complete in about that year period. So that's what I'm kind of eyeing myself, is that, all right, well, we're already at 20,000-ish or so. you still have another, we still have July, August, September, October. So basically 5-6 months in October, November. All we need to do is basically get down to 12 or wherever the low is. And then I think you have that time frame of past cycles bottoming out. That's where this one likely will as well. And I say likely because you just don't know, but also keep in mind that we have a scenario where after it bottoms out, past cycles have chopped sideways and up and down for long periods, like another 6 months before you really start that next incline. So just be aware of the past cycles and how that likely will give us an insight into this cycle.
Yeah, I believe so too. I made a video and I also talked about it on BitBoy Cryptos around the blockchain after the summer towards the end of the year, but price reflected beginning 2023. That's where I see it too. Are you calculating from November highs or April highs?
I'm doing November highs. Yeah, I do take the highest pivot, even though technically I think that was a double top. I still think, again, that was kind of if you looked at the euphoric, kind of the scale of euphoria, I would definitely say October, November was the height of it. I mean, that was just incredible. They just launched the ETF that tracked the Bitcoin futures market. I mean, you just had so much going on, so many excited people calling for 100,000, 250. And to me, that's kind of the top that I'm looking at. So you're right. It could maybe it's April, in which case we're already past that 12-month marker. But for me, it's the November, the October, late October, early November.
Got you. What do you think about the new ETF, spot ETF that's only goes short on Bitcoin? Can you tell us about that? And do you think that will affect it in any way?
Yeah, so that is interesting. I did hear about it, and the one thing when I start hearing about those vehicles coming out, especially that when we're down this much, it actually is a small bullish indicator. It's not a game-changing indicator, but what it tells you is that there's demand for the short side of Bitcoin, and the more demand, number one, it means shorts when they cover. It's buying, right? So it's forced buying back in, which is very good for Bitcoin. And it also tells you about sentiment, and sentiment just like when we were in November and you had this crazy, ridiculous, calls for $10 whatever, $1 million on Bitcoin, just the reverse is now starting to happen. So I don't think it's an exact low pivot, but it's kind of on that process, on that journey towards giving us that sentiment that should be reversal in sight.
Now, when you have an ETF that can short a Bitcoin, does that mean they have to hold Bitcoin as well?
You know what, that's a good question, right? So I do know that, I don't know if it's an ETN. Is it a grayscale? Was it a grayscale one?
I'm not sure.
Okay. So I do know, I think that I'm not sure how they're set up. You do have certain ETFs and stocks where they actually have to hold the underlying asset in that direction. And then you have other ones that just track the price action. So we really have to see exactly, and I'll have to do more research to find out which is this one.
Got you. Okay, what about stocks? What's the S&P doing right now? And then we can go into cryptocurrencies, gold, and so on.
Yeah, so the S&P is getting hammered today. And what's interesting about this, and let me bring up my chart, is that we had this nice rally over the last 2, 4, 5 trading days, and then we kind of had this pause day right here. Today, the markets are getting absolutely annihilated. This is not the price action that you wanted to see going into the July 4th holiday weekend. So again, here in the US, July 4th is coming up this weekend. It's going to be a great travel weekend. Usually markets get lighter in volume, which usually means there's a little bit more upside. We're not seeing that today. We're seeing mass selling. 2 possibilities for this. Number one, we had consumer confidence numbers today that were not great, and that could be influencing it as well. But also, you also have fund managers who are likely leaving early for the weekend, and they may just be dumping their positions because they don't want to have to watch the market over the next few days. They may not even be coming back till the end of next week, and that could be part of the selling action as well. So a couple different possibilities there, but let's be clear on this. If you look at the daily chart on the S&P, we still haven't gotten to my first target. So first target is around 3385, just below 3400. It's the pre-COVID lows. We're going there. I mean, again, whether or not we have more bounces along the way, we probably do, but that's going to be the first big level for this market where the Fed is unwinding all the stimulus. They're sucking it all out. It only makes sense that the S&P goes back and retests that pre-COVID high.
Got you. And that could take down Bitcoin with it.
Unfortunately, yes, that is another. I mean, you have to look at it like a risk assets are selling off, especially the technology sector, the tech stocks, the QQQ. If that's going to take another leg lower, then it would be hard to imagine that Bitcoin wouldn't see some downside as well.
Okay, so they're announcing that they're going pretty hawkish with interest rates. They're going to pile those in. What if I told you, I'm just hypothetically, that some information told me that after July, this is not going to be the case? Would you believe that could be true? And do you think they could be turned around once they see that this is not good, what they're doing, or they have to turn it around for some reason?
Yeah, so number one, I absolutely think that's a possibility. One of the things I've been kind of thinking about is that they're trying to front load rates with the last 75 basis point hike and maybe 50 this next meeting coming up, maybe even 75, with the idea of they want to stop raising before we get too close to the midterm elections, right? So midterms are in November. I've heard that by September, they won't be raising anymore because they don't want to influence. They don't want to cause a market reaction that would ultimately cause an influence on an election. And that's been true for almost all elections going back in recent history. So I think that's number one. So I do think that holds weight in that respect. And then the bottom line is the economy here in the US is slowing, and it is slowing very, very quickly. And that's going to put us in a position where the Fed may have to stop and wait a few months and see if does the economy perk up, or does it slide into a recession or a deep recession? If it slides, I mean, so my projections are this, is I think by year end or early 2023, we are in a recession. And if the inflation numbers come down from, let's say 8-9%, let's say back to 4 or 5%, and unemployment because of the recession spikes, let's say to 7 or 8 or 9%, the Fed will in 2023 start printing and stimulating again, or at least lowering interest rates. So I think, again, you'll see another reversal of the Fed. And this is the Fed where they won't do it until inflation comes down enough and unemployment goes up enough. But remember, their dual mandate is to keep both in check. So if unemployment surges dramatically, they're going to have to react and deal with that.
What if we're in a recession right now and the indicators for recessions are usually in hindsight?
Yeah, it's possible. It absolutely is possible. I think that from, like you said, by the time we know we're in a recession, it's usually already been 3 months since we've been in a recession. So that is a possibility. It's just unknown at this point.
Got you. So what's going on with gold? Because gold is something that we should be looking at. Gold should be going up, but it does look to be a little bit either suppressed. People don't believe it. People don't believe we're going to be in a recession. People don't like gold all of a sudden. I don't know what's going on. Rappers are changing the plan, and what's going on here?
Even though I am more, I think gold has performed amazingly well. And let me give you my case to this, and you can decide if it has any weight.
Okay.
So number one, gold is still positive slightly, just slightly, but positive for the year. That's compared to Bitcoin down, 50% or more. We have the US markets are down 20-30% or so, and gold again is holding its value. Now, the fact that gold isn't surging to the upside is very perplexing to a lot of investors, but I want to show you why, right? And I want to show you why it's so impressive what gold is doing. So number one, it's already broken out and it hasn't failed. It hasn't come back inside of here. Number two, we know two things. Number one, when the dollar goes up, generally gold goes down.
Yes.
Well, let's take a look at what the dollar has done since the start of the year. Look at the DXY. Since the start of the year, the dollar has surged from here all the way up. And what's gold? It's still net positive for the year. Now, what about 10-year yields? We know that when yields rise, at least for the last 20 plus years, gold has also gone down. So if you just looked at yields in the dollar, you'd be like, oh, gold's got to be getting crushed. It's got to be down 10-20% on the year. And if we go to the 10-year yield, take a look at this. I mean, yields have surged too. So the fact is that gold is holding its ground. It's not necessarily rewarding you with 10 or 20% gains, but considering what yields have done and what the dollar has done, I mean, it's remarkable what gold has actually been able to achieve this year, in my opinion. And the idea here is that if we get to a point where the Fed starts to lower rates again or to print money again, and if the dollar starts to fade, which inevitably, in my opinion, it will. Yep.
Otherwise, you're going to be importing everything in the States forever.
Yeah, right. I mean, it's nutty, but the bottom line is, right. I mean, the dollar is eventually going to fade. Yields, if I'm right, and the Fed has to turn on the printing presses or at least lower 10-year, interest rates again, then gold is setting up to have a major move up. So I'm still very bullish on gold at this point. I think that Bitcoin is getting to that area where it's like, okay, now it's got a lot of the fluff out of it. It's starting to get attractive. Gold is already attractive. Gold is a safer play. I sleep a lot better when I'm invested in gold versus invested in some other, assets at this point.
Anything.
Yeah.
Even Bitcoin. I love Bitcoin.
Right. That's right.
Let me, and whichever one disliked this video now, just, I don't care. It's true. Right.
Yeah.
Right. Let me ask you this. Let's go back to the stock market, because I forgot to ask you, is there any stocks we should be looking at right now?
Wow. Oh, that's a good question here. So I think what you want to do is you want to be a shorter term investor in a lot of names, not knowing what the economy is going to do. So for instance, I mean, there are names that are kind of, they're the quality names. So I'm not looking at Apple. I'm not looking at Microsoft just yet, but I'm looking at other stocks that have low PE ratios. And again, I'm usually a technical trader, but in this scenario, I'm interested in things like Warner Brothers, Discovery, trading at like a forward PE of like 5 or 6 right now. To me, that tells me that yes, maybe it outperforms and gains, but also the downside hopefully is limited because of their earnings potential. Same thing could be said for other ones like an IBM. IBM, the PE ratio is a little high, but what I like about IBM is it's broken out. And versus, if you look at Apple, if you look at all these other big tech names, they were all hitting all-time highs over the past couple years, right? But IBM has not. And that tells me that IBM, again, maybe still has legs to it because, again, it hasn't been rewarded. People haven't priced in ridiculous long-term growth like they have on some of these other names out there as well. So for me, I do think there are places, but it is risky, folks. And again, being a swing trader is much safer in this environment, being in and being out, versus being a long-term holder with the potential of significant downside. So if you're going to be an investor in the markets, you got to be very nimble or find very safe or as safe as you can stocks.
Okay, can you do me a favor? Can we look at Disney for a second?
Yeah, let's take a look here. So here's your Disney chart right here.
Wait, let me ask you. Do you think it's gonna woke up?
Is it gonna woke up? I mean, I'm just a chart guy, right? And
I know, but I had to throw that in there. I'm sorry.
I know. But I think the bottom line is right down here. This is your level, right? So I'm going to get interested. It only has a little bit more to go, maybe back to about 80, 79 bucks. And let's be honest, for me, I'm a trader, so I just follow the charts. All that other stuff is just nonsense. And it kind of, you always have to be careful about that too, because that triggers emotional responses, which then makes you do the wrong thing. So always just remember, the charts are the most truth you can get is by looking at the charts. There's no tweeters on it or people pumping it. It's just the chart, and it's a very pure form of honesty.
So let's go to cryptocurrencies. Let's go to Ethereum real quick.
Ethereum, sure.
Tell me what you think compared to Bitcoin, because we did see some actions from altcoins. I want to see your perspective on this.
Absolutely. So Ethereum, it has had a bounce, and a decent bounce at that. I was a little surprised it didn't tag this lower support line right here. It got really close before its bounce, but this is a big level on Ethereum, right around $815. If it breaks that, then you have your next level down here at around 500, and then possibly even lower. So 815 or so, or 800, huge level. You do have a bottom in right now, but again, are we going to hold it? That's going to be the big question. And again, I'm not sure, but Ethereum is getting very attractive and listen, holding cryptos as a long-term investor is very tricky because you just don't know about the volatility, but these are finally getting in my wheelhouse. I was warning when we were at 65 or 69,000 on Bitcoin. We're finally getting to levels where I wouldn't buy a big chunk, but I think nibbling, 800, sub 800 on Ethereum, and then buying at 5 and buying at 3, you're going to put yourself in a position where if I'm right and these cryptos do survive, and I'm talking about best of breed here. Best of breed is so important. Bitcoin, Ethereum, then you're going to make a lot of money in the future.
Would you buy Bitcoin or Ethereum if you had the choice right now for bigger gains?
Oh my goodness.
Safety,
I would do
safety,
Bitcoin right
safety
now.
being, yeah, safety being part of that.
Yeah, so I mean, just based on the fact that so I think even we heard from I don't know if it was Gary Gensler, but he basically said Bitcoin's the only pure commodity play out there. I think you have to take that as a hint and say, listen, we don't know what type of regulation these other coins could be under, but he's basically saying Bitcoin is not, right? It's going to be viewed as a commodity. So at this stage, Bitcoin is the key. I do think at some point we inch into, you want to have a little Ethereum, but I do think Bitcoin is the play where you're going to be safest.
Can we look at Cardano since everyone loves Cardano?
Yeah, let me take a look
I
here.
like Cardano too, but I got out a while ago.
Yeah, I
A
mean,
while ago.
Cardano, amazing collapse. Now, the one thing I'll say on Cardano, it's in this very tight range, right? If it can break out right above this line here, it's got some legs. I would say you potentially could even go as high as around 65 cents, which from 47, 48 is actually percentage-wise a really, really nice move, about a 50, just under 50% move. But right now it is stuck. It is stuck in this what's called a wedge pattern. And wedge patterns, notoriously, you don't know if they're going to break down or break up in the near term. So what you want to do is you want to wait for it to happen. And then if you are into it, you jump on board. Because again, you don't want to jump on board here assuming it's going to break out and then it breaks down and you get caught in another 50% drawdown on Cardano. But yeah, I mean, absolutely amazing on the price action here. So many of these altcoins have just been bludgeoned to pretty much almost death.
Where do you think Cardano will go if Bitcoin keeps on going down from here at the 14, 15K or somewhere like that?
Oh my goodness.
10 cents.
That is such a hard question. I mean,
It is, isn't it?
I mean,
I gotta give you the difficult questions, Gareth. I got it, man. It's the only way to stand out.
I would say, I mean, listen, so we know that Cardano is basically a multiple, right? It generally is a multiple of Bitcoin, just like a lot of the alts are. They move like 2 times. So, I mean, if Bitcoin's going to drop another, let's say 40%, you could see 60% downside on Cardano. That would not be shocking to see. Maybe even more than that. So, I mean, it could go to 20 cents for all we know, right? I mean, very easily 20 cents. Let's just hope the core value, like I think this bear markets are a time when people look at what real value is there. And so investors to buy back into these things and big money to get involved, they need to see that there's real use case. And that's why so many of the coins, in my opinion, are going to go by the wayside and go out of business because they don't have sustainable use cases.
Yeah. And finally, one last one, XRP, because everyone loves XRP and you got to do this.
So, I mean, we're still, as far as I know, we're still waiting on this decision by the judge, right?
Yeah.
Yeah. So, I mean, so let's take a look at the chart here. So
are the charts going to tell us before the decision comes out? That's what my question.
It's possible. Like, I mean, if it were to trade down into a major support, it's possible we would know ahead of time. I mean, for me, 22 cents would be epically big support down here. You can see these lows going back all the way multiple years. It right now is just holding this former level, but I don't have a great eye on this. It's not something, I mean, I could extend this line out as well, but we're way below that. I don't have a good read on it at this point in time. So it's hard to know. Sometimes the charts will alert you. Sometimes you just don't see it, right? It might be in the chart, but you're too hesitant based on potentially emotion or just being careful that you just don't see the signs as well. But we could easily look back and say, hey, look, big money was accumulating. Look at that candle or look at that price action. They must have known. And then we just didn't see it in the charts.
Okay. What advice would you give our audience right now watching this video, watching you, thinking of swing trading, thinking about long-term investment? What would you advise them right now?
So it just depends on the thesis for each individual investor, right? So if you're an investor who wants to be active, then you need to follow and learn, right? Education, number one. This market will make you go broke if you do not know what you're doing. So either don't do it or get educated and do it with education behind you, or follow people that do know what they're doing. In terms of long-term investing, stick with the best of breed, especially when it comes to cryptocurrencies. Don't put yourself at risk. And remember, there's still risk. Investing in Bitcoin, Ethereum, there's still lots of risk. It's just a lower level of risk. So again, never invest money you can't afford to lose. We know that. Think about dollar cost averaging. Always go into a trade assuming your first entry or even your second entry might be wrong. Keep some on the side to be able to deploy later on. Bear markets are notoriously markets. They'll go a lot lower than any of us think. Like if I'm saying 12, I'm fully aware it could go to 8 or 6 because sometimes that's the way bear markets work. Always be aware of that.
Gareth, thank you so much. Really appreciate you. Love having you on. And I'll see you again in 2 weeks, correct?
Sounds good. Sounds perfect.
Thank you very much, Gareth. Take care.
Take care.
Bye-bye.